Everyone, thanks for joining us. This is Yield Talks on the Edge podcast. I'm DeFi Dad here with Nomadic. Aside from our longer form video interviews, we love to host live spaces with builders and investors to review compelling new protocols and ideas in DeFi. So before we get started, I just want to quickly shout out our partners at the Edge podcast. They make it possible for us to create this content and share it all for free. Everything's ungated. If you go to the-edge.xyz, that's the best place to subscribe to the podcast and to the newsletter. Partners like TOROS Finance and REDSTONE.
Grow wealth exponentially. With TOROS leveraged tokens, when the market moves in your favor, your gains become parabolic. They're built to ride trends, auto-compounding profits. With TOROS, it's simple. Pick a vault, deposit, and your exposure is multiplied, maintained, and protected automatically against liquidations. TOROS reduces risk and keeps you in the market ready for the rebound. When markets dip, the vaults auto-adjust, softening losses and preserving your position. Just pick a token to multiply your returns. TOROS Finance, exponential gains with leveraged tokens. To learn more, go to toros.finance. REDSTONE is building the Oracle backbone to unlock real-world finance on-chain and next-gen DeFi. With modular gas-efficient feeds across over 110 chains, trusted by 170 clients, supporting over 1,300 assets, from value-accruing stablecoins, liquid staking and restaking tokens, to treasuries, private credit, and commodity tokens, REDSTONE delivers accurate real-time data where it matters most. The biggest platforms and protocols in DeFi today choose REDSTONE oracles, such as Athena, Securitize, BlackRock Biddle, Pendle, Spark, and Maple Finance. If you're building the future of finance on-chain, you need REDSTONE's leading modular blockchain oracle layer. To learn more, go to redstone.finance, and thanks to REDSTONE for supporting us here at the Edge podcast and Edge newsletter. Banks use your money to line the pockets of shareholders. Meanwhile, Solstice uses the same yield strategies to line your pockets. Introducing Yield Vault, Solana's best yield. A live delta neutral strategy with positive returns month over month for 3 years. Built for internet capital markets and powered by the stablecoin USX. To learn more, go to solstice.finance. NEUTRL is the next generation of crypto-native yield. Their synthetic dollar NUSD taps into OTC arbitrage, funding rate inefficiencies, and delta-neutral strategies to deliver premium, stable returns without taking market direction risk. NEUTRL is now officially live to mint NUSD and start earning neutral points. Learn more at neutral.fi.
We just recorded a new episode with the founding partner and CIO of Atlas Merchant Capital, David Seamus, where we talk more about his thesis on Hyperliquid and why he and his colleagues are so excited about equities trading on-chain via Hyperliquid. We are front-running that interview with a more crypto-native view with our friend Omnia. We wanted to give a guide on what are HIP-3 markets. It is a term that is coming up in more mainstream DeFi conversations. Truthfully, I have been woefully behind on HIP-3 markets until recently. And so we'd love to get everyone caught up today on why they are so exciting, the state of HIP-3 markets, and what is coming next. So Omnia is the co-founder of Kinetiq, the largest liquid staking protocol for HYPE. We're extremely grateful to have you with us, Omnia. How are you doing?
Yeah, all good. How about you guys?
Great. Other than my wealth collapsing 50% last week, I'm doing fantastic.
Who's counting? Who's counting these days?
Yeah, it's been a rough week. So I'm very grateful to talk with builders like you and remind myself, why this is the future of finance. But why don't you tell us first just a little more about Kinetiq, and then we'll get more into, again, the HIP-3 markets and what are they?
So Kinetiq is the leading liquid staking protocol on Hyperliquid. Currently maintains about 84% of all liquid staking market share on Hyperliquid today. Represents a very large amount of stake HYPE cumulatively across the board, about 13% of the circulating supply, and about 3% of the total supply. So as in the hype was. So thankfully, we've had the pleasure of becoming really, really large on the liquid staking protocol of choice for many Hyperliquid users, traders, and EVM enjoyers who love to basically deploy in DeFi. And yeah, Kinetiq has essentially attached a very interesting offering along with the liquid staking protocol, which is a DeFi vault ran by Vega Labs. So it's been a really fruitful collaboration. It was one of the reasons the Pendle market on HyperEVM grew to be Pendle's largest market at one point, where the Kinetiq markets were like 99% of the TVL on Pendle's HyperEVM deployment. So yeah, and today maybe a little over 70% of K-Hype in existence is actually used and deployed well throughout HyperEVM DeFi. So across money markets, Pendle, liquidity protocols like Project X and other AMMs and more. Options protocols like Risk, for example, is a great other one to point out. So yeah, it's been really fun. But yeah, this is Kinetiq so far.
Yeah, Omnia, I have more questions on Kinetiq that we'll get to a bit later, but I have a ton of questions personally just about HIP-3. We've seen it go live. I think there's still people out there that aren't totally up to speed on what it is. So why don't we just start there? Maybe just give us your high-level overview of HIP-3, and then I've got some questions I've been kind of burning to ask somebody that's a little bit more in the weeds on this stuff than myself. So yeah, let's start there with HIP-3.
So HIP-3, as I like to call it, some people call it HIP. So yeah, like either way, it is a Hyperliquid Improvement Proposal 3 is essentially what's called builder deployed perps. So today, Hyperliquid operates its own set of perpetuals that it completely controls and decides, alongside validators of Hyperliquid, essentially. So these are called validator operated perps, right? Validators vote to delist them every so often just to ensure the platform doesn't have any risky perp live or like adjust parameters at any time. HIP-3 essentially allows any deployer to permissionlessly come into this role, essentially, of being able to provide a perp on literally anything you want. Whether it's, I've seen crazy things like, obviously we all have gotten familiarized with things like equities, but I've even seen things in the works like for weather, for example. So people want to use perpetual futures to essentially create markets on anything, and Hyperliquid has offered a really interesting way to do so. Now, the barrier to entry is pretty high, and my theory is that this is purposefully so. So you need today 500,000 hype. It's a stake requirement that was reduced from 1 million hype when it was initially announced in April or May of this year. And yeah, the 500,000 hype requirement essentially is required as like deployer bond, essentially, which keeps deployers aligned and benevolent to the protocol and to their people that will use the exchange that they can deploy, or their own DEX essentially on top of Hyperliquid. So that's the high level of HIP-3. There is no slashing risk on Hyperliquid, not even with regular staking, but there is with HIP-3, given the fact that there's a lot more at stake, right? They are more sensitive markets and are up to deployers who may vary in terms of their level of quality, resourcefulness, or competence and execution ability. So Hyperliquid does protect itself in that sense, and people who trade those markets with the ability to slash deployers who may be incompetent or have issues or something like that. So yeah, that's the idea, and that's HIP-3 at a high level. Basically allow for a perp on anything and do so permissionlessly without requiring anything on Hyperliquid side.
We've seen a flurry of these markets come to market. We've got Tesla, we've got gold, we've got Robinhood, we've got SpaceX, we've got Nvidia, we've got Palantir.
For Apple today as well. Yep.
Apple. So what I'm also seeing, just looking at the front end on Hyperliquid, there's three main issuers right now that I see. There's Trade.xyz, there's Ventuals, there's Felix. We're getting repeat tickers now. We're getting, Tesla with USDC, Tesla with USDH. These are just examples. I don't know for sure. I'm not looking at it right now, but
yep.
I'm seeing sort of a problem. Maybe it's not a problem, but I think a complex UI issue coming down the pipe here. there's probably going to be a lot more of these issuers. We'll maybe get to that a bit later, but yeah, how are these going to? So my main question that I've been curious, just like looking at this happen, how are these going to differentiate from one another? Like, what are the factors that will make somebody go to one over another? How do these separate? And fill me in on that kind of best you can, Omnia.
It's a good question. I think it'll be the exact same way. Like how to look at that, in my personal opinion, is going to be the exact same way that anybody assesses any product today, especially within the same category, right? So if you have perps on equities, whether the listing is the exact same or the collateral may be slightly different, etc., like it will come down to quite a few things ultimately. But I personally look at it as less complicated than many others might. Like you said, there may actually be like 10 tickers for Tesla in the future. Who knows, right? But how I look at it is quite a few things, and how Hyperliquid will choose to actually go about abstracting it and sorting it by certain KPIs or metrics is entirely up to them, if they even care to do that. Today, there's an HIP-3 strict list. So I suppose, and again, for those that understand Hyperliquid, their strict list requirements are entirely internal, so nobody knows like what's required to get on said strict list. But that is one way of filtering. But for the actual users themselves, right, like everybody should know that Hyperliquid today has just offered really the rails by which people can come and build these types of products and offerings on top of. But it's up to the deployer themselves to actually come down to figuring out who the Oracle provider or providers will be, what the liquidity profile looks like, what the risk curation is like, what the risk parameters are like, how markets have selected, and so on and so forth. There's a lot that goes into HIP-3 that most still do not understand and likely won't ever understand, and that's totally fine. But yeah, at the end of the day, the end trading experience for the users that will actually be in the box and like actually using these platforms to trade in and out of equities and beyond. This ultimately is like personally for me what makes the difference, right? Like what does the liquidity profile look on Tesla with USDC over USDH, for example? And then this is where the deployers start to essentially go toe to toe in terms of what competitive advantages they can offer their users. I think there's even another layer here where the front end component, the analytical side of things, the latency, these types of things can offer just a bit more juice to the user to get over the line in terms of using their front end over, say, the regular Hyperliquid front end, for example. So like the way I look at it is those things I highlighted, right? Like how the market composition is versus another. So I look at it from a similar framework as to how I would assess a perp DEX, right? Like what does the liquidity look like on other DEXs like extended or lighter versus Hyperliquid, right? That may influence somebody's decision. And then another component would be the Oracle design, right? How they go about having BTC priced on their platform versus how Hyperliquid may do it. So it's the same way, just at a different level. And the fact that it's being done on Hyperliquid alone just like is mind-blowing, because you have these different sub-DEXs that are competing at, very interesting layers of the stack to offer that edge to users, and just general pricing edge. So anyway, yeah, that's how I look at it personally. And I think it's more simple than people think. But yeah, I think another key to this too is like how front ends like Phantom or PvP with their recently acquired HyperDash, or anyone else like Based, for example, like several front ends. Like I think at this point there's well over 100 confirmed people using Hyperliquid for their perp offering on the back end. Like how do they go about sorting it, right? Do they align with particular deployers? Do they sort it by metrics? Like what's shown there? I feel like there's a massive design space for, if there's 5 or 10 Tesla markets, you're showing the most liquid one at any given time. So on the back end, the user doesn't give a shit whether they're trading with like USDC, USDH, USDE by Athena, or whatever other stablecoin as collateral. But as long as they're getting the best execution, that is a huge opportunity for front ends, right? Huge. So yeah, I mean, that's how I personally look at it.
This mirrors what we saw happen with like the early days of Uniswap and other DEXs. You would look at the AMMs and say, aren't these markets all the same? And some of the time the trader was, advanced enough to realize they were getting better pricing on one AMM versus another. But then some of it was just opportunity for great designers to create better front ends. And so I think we're just so early with these HIP-3 markets. a lot of folks are using the Hyperliquid front end, the like mothership home base front end there. And I just recently, I didn't know what trade.xyz was. I didn't realize there was a separate front end. So, I'm someone who's like living in lots of different DeFi. And I, again, just recently was realizing, oh my gosh, there's so much development here that I've totally lost track of. So if I can lose track of it, I feel like just about anyone can. I think the designers will step in. The folks who see an economic incentive will step in. And to your point, the best liquidity, the best pricing, the best UI is ultimately going to win. There's a lot of interesting opportunity with builder codes, of course, with all of these different front ends feeding in, like Phantom, for example, or any of these other types of wallets. And so that plays a whole nother role in this, not just the design, but the distribution that some of these massive wallets have. And like, what are they going to feed into? They're going to very likely make a decision to feed their users into the safest, most liquid markets. So all of this is making sense. I think I want to back up for just a moment and get your perspective on the users, the HIP-3 market users, the traders. Who are those traders? Are they crypto native leverage traders? Are you talking to, liquid funds in the space, VCs? Have we heard any conversations with Wall Street types of like high frequency trading type desks that are getting into the space and seeing the opportunity to trade on Hyperliquid?
So the current trader base for HIP-3 markets is practically zero institutions today. And by that, again, like HIP-3 is a matter of weeks old, right? And when you look at the current set of deployers as well, like they're obviously playing a longer term game as well. Liquidity is not a matter of 2 weeks or 1 month. It's a matter of years being built, as Hyperliquid has demonstrated, right? So it's extremely early into the HIP-3 game to decide a winner or anything like that. Like, yes, these two or these three, because eventuals with pre-IPO markets is not trading, these three are very much front runners, absolutely. But there's a lot more yet to come to life. And it's very interesting to see what the current trader base looks like, which is practically entirely retail or some I can't say like semi-institution, but like a very large whales that have the ability to hedge using perps and then access the markets that are available on HIP-3 today through traditional rails. So that's been a really interesting trade to actually see play out. That's the current composition. It's really retail that is essentially trying to run up volume on Hyperliquid. It's been really interesting to see some of the execution. For example, like there was a trader the other day that slipped NVIDIA by like 8% by market closing a several $1 million position, which is pretty hilarious to see. And as you can imagine, like institutions that see this must absolutely see in wanting to be approved by their compliance teams to trade on Hyperliquid immediately to be able to capture things like this. So that's what's been really interesting, right? Like we've seen things like funding rates blow out, which brings in more institutions who have the ability to, or traders in general, that have the ability to basically access these markets traditionally and then hedge with the perp through HIP-3, bring down the funding rate and capture the yield there. It's been really cool to see it come to life. And I do think HIP-3 and its corresponding markets will develop a lot faster because of Hyperliquid's current flywheel and nearly 1 million unique users come in and basically pile into those markets as well. I mean, everybody is trading for the fabled quote unquote season 3. I mean, I'm a hater of two words, farm and season, right? Like those two words over the last 2 years have just absolutely boiled my blood. But the point is just like speaking in the, in context, like there is a lot of retail on Hyperliquid who are very interested in increasing their volume to qualify for future Hyperliquid tokens, and whatever other incentives may follow by protocols who are in the deployment space right now for HIP-3. So very exciting times, very early. I think we're not even like 4 weeks in, or maybe just not touching that. But it's been good times so far. Really cool stuff that's played out already.
The Mantle Global Hackathon is a 3-month competition inviting developers and founders to design and deploy scalable Web3 and RWA products on Mantle's modular Ethereum L2, built for high performance, low fees, and full EVM compatibility. With $150,000 in prizes and a $30,000 grand prize, now is the time to build. Register by December 31st, 2025. Submissions are due by January 15th, 2026. To learn more, go to mantle.to/hackathon/U4U, and don't forget to follow Mantle_official on X.
KATANA is an opinionated blockchain. Its opinion is that for DeFi adoption, there are 2 key things we need: deep liquidity and high yield.
To learn more, go to katana.network. DECIBEL is the new sound of trading, a fully on-chain trading engine supporting spot markets, perps, and yield to trade global markets. Enjoy trustless execution and sub-penny transaction fees. Join the future of trading at decibel.trade and access the Decibel testnet today.
I was going to ask you kind of just what you thought of this HIP-3 rollout. I think just going back to NVIDIA, I think like one of my aha moments for this so far was just seeing the action around that NVIDIA earnings call. I think it was that CL, the cat character. Yeah, I think he was like 10x long NVIDIA or something like that. And like going into that earnings call. And I was just sitting there thinking like, wow, this is cool because you've got people that can access the market, outside of regular trading hours, leading into a major event, and they can take a view with leverage on a publicly traded equity. Just kind of like wild to see. So that's kind of been my first like, holy shit, kind of proof point of this. And I think Trade.xyz had their biggest volume day. Don't quote me on that, but I think it was like, 200 million or something. This kind of actually segues us into something I want to ask you as well, Omnia. There's been this cheeky new X handle go up called Markets. What can you tell us? Because it's clearly Markets by Kinetiq.
Yep.
Yeah, what are you at liberty to share here live right now with us?
It's a good question. I think people are starting to put together the dots that Kinetiq is very, very far from simply a liquid staking protocol. That's pretty much it, unfortunately, for listeners right now. But yeah, the point is, I think it's very, very clear that Kinetiq is shaping up to be a lot more than that. Liquid staking, as you can imagine, is the staking side of things is very interesting, right? It's been an extremely competitive space. Again, not specifically speaking about Hyperliquid, but speaking in general, right? Like when Lido introduced this liquid staking opportunity, obviously it's huge, and like many businesses have been built off that. It's been really cool to see, and like how Kinetiq has fit into this picture has been from learning from the giants, if you will, for a very long time. And what we realized is liquid staking, if good for really anything outside of unlocking which is the core offering, like unlocking stake and ensuring that maximum capital efficiency exists and properly introduces really, I guess you could say, safe utilization of a staked asset into the DeFi component of an ecosystem, it is really for distribution, right? Today, there's close to 30,000 K-HYPE stakers, which has been really great to see. It's a large portion of the people that hold HYPE. Well over 10% of the people that hold HYPE technically are K-HYPE stakers. So that's been a really massive feat for us to realize and put into motion. At some point, there was 90% of K-HYPE being utilized. Today, it sits at a little bit over 70% in all of DeFi. At some point, the Kinetiq Earn Vault was the second largest vault in all of DeFi and had done so very, very quickly within 4 to 6 weeks of launch. Right. So one of the ways that we were able to do this is essentially by ensuring that Kinetiq was always the ground floor from the fee perspective, because staking is not a very attractive revenue model. The incumbents prior to Kinetiq, even with a 10 to 22% rake on staking rewards, had at maximum, maybe, between $1 million and $2 million a year. So it was very clear to us that in order to actually create value from the Kinetiq protocol outside of a simple staking offering, there has to be way more. Launch was introduced a little bit after Kinetiq went live. The introduction of permissionless LSTs with launch is also going to be extremely interesting. And now markets as well as a, I guess you could say, byproduct of what's followed. What's followed the Kinetiq going live a few months ago back in July. So yeah, it's going to be very interesting to say the least. Very exciting times ahead. As many have noticed, the Kinetiq Foundation terms of use signing closes in roughly an hour and a half from now. So hopefully those that have gotten involved have done so. Yeah, so yeah, it's just a really exciting time overall. And I hate to be that guy. Like I don't like the edging thing, but still, the point being, like, more will be shared on markets at the right time. And yeah, I think everybody is very, like, what's been really humbling to see has been, like, obviously people speculate on what it could be, but yeah, it's going to be really fun for sure.
Okay, I won't press you on more about markets because I feel like there's just more to come there. But something you mentioned that's clearly important is the terms of service. So
Yep.
That's also alluding to probably the future airdrop here, the coming of the KNTQ token. Is there anything more you can tell us about that right now? Maybe the importance of the Kinetiq token within the Kinetiq ecosystem? Yeah, any more details you can sort of shed on that. And then again, anybody listening to this, make sure you sign the terms of service thing. We don't want any tears after the fact or stories that, hey, I was backpacking in Africa, I didn't see any of this, and what the hell happened? But yeah.
Flashback of Hyperliquid days has been really crazy to reminisce on. But yeah, I mean, again, I'm going to have to roll the same thing, right? Like, still a lot in terms of what can be spoken about regarding KNTQ. It's been really interesting, right? Like, token launches on Hyperliquid have been really cool to see. I am really proud to say that Kinetiq is very inspired by how Hyperliquid went about their distribution. And I don't mean distribution in terms of holders, I mean distribution in terms of the technology that was used and, like, what's novel to Hyperliquid, what inspired us from day one to ensure that whatever came from Kinetiq was done so properly and done using all of the novel tech that Hyperliquid offers. And maybe this ties back to markets a little bit as well, but I think to myself a lot, like, it would be really, really sad reality if the largest liquid staking protocol in Hyperliquid, the one that's brought the most usage out of Hype in all of Hyperliquid DeFi, simply remained a liquid staking protocol. That's, like, been a really nightmarish thought. So, as I mentioned recently as well, so the Kinetiq team is 17-ish now, 17-8, depending on how you think about it. Like, thankfully, we have a really great team, including legal, that works with us on everything. So, yeah, the idea has always been, like, this entire team that is fully focused on realizing this vision of Kinetiq being so much more than a liquid staking protocol. So it's been really, really special to see play out, and even more special to be a part of building it. So yeah, very, very humbled to, like, be even talking about it today. But yeah, like, more to come, obviously, for markets, and very glad people are enjoying the production. And obviously KNTQ pretty soon as well.
Omnia, you mentioned earlier that Kinetiq isn't just a liquid staking protocol. That must reflect lessons you've seen from other liquid staking protocols. I'm curious, how do you describe Kinetiq then today? Because if someone had asked me, you heard my introduction, I said it's the leading liquid staking protocol for Hype. So that is a great way to describe Kinetiq up until now. What does this desire to expand beyond that? What does that reflect? Like, what have you seen from, the likes of Lido, for example, that has prompted you to think bigger?
Liquid staking has remained a very stale space for a very long time. So hence why Kinetiq launched with a DeFi offering hand in hand. That was already, like, pushing the boundaries by a little bit. It's something that has been experimented with on Ethereum mainnet. Funny enough, like, around 4 weeks after Kinetiq launched, Lido had, again with Veda as well, which is really cool, a vault directly baked into the Lido platform. So that was interesting to see. But the point being that, yeah, like, liquid staking alone is cool, yes, but it's I don't know. To be honest, like, liquid staking by itself is actually very boring. It's something that we have a lot of experience in because primarily Kinetiq team are users of liquid staking protocols, so we understand them inside out, and from there we were able to build what we believe is the best liquid staking solution so far that doesn't destroy people economically or their yield. if anything, quite the opposite. Helps them to find better yield on HYPE and run really interesting trades on their staked versions of HYPE through KHYPE. So yeah, the other side of it too has been Kinetiq, weirdly enough, has actually been the only institutional gateway on HyperVM to institutions coming to Hyperliquid and being able to actually use their HYPE and stake it and interact in a way that otherwise they literally cannot right now. I think people literally do not understand that custodians do not support Hypercore, meaning that institutions who would like to hold really, really large amounts of HYPE are quite literally not able to do so, right? So how they usually do this, and I'm sure people have seen this a lot through several channels like MLM, for example, has been they will interface with desks through centralized exchanges who will then source HYPE from Hypercore, from desks who can actually trade on Hyperliquid, and then pass it off to whichever prospective buyer through a centralized exchange. And then that's when the custodian will be able to step in. And now some custodians, for example, like Anchorage and even BitGo recently, support HyperEVM, so now they can start to make the move over. But again, the Hypercore is still completely missing from the picture. Why? Because it is a more bespoke integration. EVM is obviously a lot easier to integrate. So there's still like a lot of really interesting institutional rails that do not exist today. And as everybody knows, the Hyperliquid team is not going to pay for any integration whatsoever. For example, the USDT0 integration, my understanding of that is that it's a several $1 million, like $4 or $5 million integration. That's not paid for. Etherscan is like a $2 million integration for new ecosystems. That's obviously not paid for, and countless others, right? So the same is going to be the case with custodians who have to make the business case internally to support Hyperliquid. And what's really been cool, and like why Kinetiq acts as this weird extension of Hyperliquid in different ways, I guess you could say, is the Kinetiq protocol. And again, I would say like all protocols on Hyperliquid is the marketing arm. So in our case, we want to see institutions stake. If they didn't have the mandate to basically come out to Hyperliquid and do it themselves, it's very hard to support that. So iHype was developed, which essentially allows them to come and take HYPE from HyperEVM, stake it with us for their own custom LST. You can call it ABC HYPE or XYZ HYPE or whatever. Customize the validators by which this stake is split amongst. So we have several regulated market makers that do this with us today, and several publicly traded companies that do this with us today. Hyperion DeFi being the largest. So yeah, it's been really interesting to see. Like Kinetiq has a very interesting, obviously huge DeFi offering, and then there is this interesting CDeFi component as well, where people, like institutions, can come and actually mint these iHype versions or instances for themselves, and then actually interface with custodians or OTC desks, and have lending situations going on, or derivative situations, or other spot services. So yeah, it's been really cool to see, and Kinetiq is focused on much more than just like proliferation of KHYPE, but also institutions coming to Hyperliquid. So it's a weird position in a good way. I mean, it's like a gateway for Hyperliquid in a lot of ways. So obviously we only expect this to continue and further accelerate. And now for the next phase of Kinetiq that we go into, it should be even more fun. So yeah, I hope that, again, I tend to ramble a bit about these things, but yeah, that's the shortest explanation I could think of as to like how Kinetiq ceases to be just a mere liquid staking protocol, but also a lot more things for the ecosystem via its product suite and just its general position.
No, I think that point about the institutional side is still lost on some people. And I'm just going to reiterate. So for people that weren't in the spaces when we first kicked off, we mentioned in our opening that we just taped a pod with David Shamus from Atlas Merchant Capital. Him and Bob Diamond are basically setting up a digital asset treasury to go and buy a shit ton of HYPE. But one of the things he mentioned was he's had people come to him, and he said, a major market maker in the US, like talking many billions, how bullish they are on HYPE. And he assumed they would have had a ton already, but they didn't. They can't hold it. It's kind of against their mandate right now. They need sort of an institutional wrapper way in. And in this case, the DAT is partially solving for that. So, I mean, there's a ton of people out there that just haven't been able to buy HYPE in its current form. And actually, the question that prompted this was, would Hyperliquid strategies hold iHype? And would they stake it with Kinetiq? And he said, yeah, absolutely. Like that's one method that they're looking into. But yeah, it was just kind of shocking to hear it from the inside, just how difficult it is. Like I hear this all the time, but it just seems like more meaningful when you get it firsthand like that. But I want to transition a little bit into just general Hyperliquid stuff, because whenever I need to get up to speed on something, I feel like it's been Omnia's X handle that's kind of gotten me there. Just kind of like the early days writing articles about builder codes before I even knew what they were. HIP-3, you name it. So I want to know what you think people that are bullish on Hyperliquid should be paying attention to next. What's classic our community, always what's next, never satisfied with what we have now. But
no one's satisfied with $2.5 million a day or more in fees, right? Like straight into the token. That's great.
Is there anything on your radar that's kind of like perking your ears up that's coming down the pipe?
Yeah, I mean, it's a good question. I think obviously the liquidity growth on Hyperliquid has been really sick to see. The aligned forward asset stuff, again, this is more technical, has been really crazy. I think like if there's something to pay attention to, like I've never been I've never gone really deep down the rabbit hole of that. Like I've only seen obviously like who doesn't know strategy today, and then obviously like the Hyperliquid ones, because it's the only one relevant to us. And to me personally, like I don't care for like a sweet dat or something, like I've not paid attention to the level of I don't know, like damage that all the DAT creation and like these weird alt ecosystems with like no traction are up to. But I think it's been a really interesting indicator to see like when institutions start to trade on Hyperliquid. By institutions, I mean like larger market makers or prop firms coming to trade on Hyperliquid. This is probably like a lesser known thing, but the point that you just touched on, Nomadic, around how the compliance issue and the mandate issues stop a lot of teams or funds and like other institutions from being able to buy and hold hype. Again, I don't mean in that way. I'm talking about people that would come and actually buy and hold hype for the years to come and look for an Ethereum S run or Solana S run or something like that, right? Like those people literally are forced on the sideline because they have extremely stringent risk controls and compliance controls that completely prohibit them from buying a hype and then obviously subsequently holding it for a ridiculous amount of time, right? So those that have the mandate, such as more crypto native funds, have obviously had a very easy time doing this, right? It's very infrequent that you find a crypto fund or vehicle of some kind holding really, really high 8 figures worth of hype or several 9 figures, if not more, similar to Paradigm, for example, which the MLM found out the other day is technically the single largest holder of hype. HyperStrategies would likely follow behind that from an entity perspective. That's like a regular day on Solana, right? At 100 and something billion FDV today. I don't even know what it would be at, but yeah, that's like a regular field day, right? Like several 9-figure holders, several deep 8-figure holders. That's not the case on Hyperliquid. Like the top 100 on Hyperliquid is maybe a few $1 million worth of hype sitting in the wallet, maybe. So obviously it needs to grow more and more, but the point being that it's really cool to see a lot of the compliance barriers come down. I know it's not easy for most people to go and like find some institution like coming to Hyperliquid for the first time, but many people don't know there's a $5 billion market neutral fund that trades all day long on Hyperliquid. That MLM has sold out a lot at Braxis Capital. They're huge on Hypercore trading, those neutral, and then also on HyperEVM. They were huge users of the Kinetiq market on Pendle, for example. And it's a no-brainer, right? You can lock in XYZ% of fixed yield on Hype and the staked version of it over XYZ period of time. Meanwhile, hedge out whatever risk through, shorting the perp and then collecting the spread on that, right? Like it's a massive trade and they do it in really large size. And we're only starting to see this replicate. So yeah, Hyperliquid and HyperEVM specifically may have moments of contraction, but definitely not a lack of interest, that's for sure. So again, I know I have the pattern, as you can see, of like rambling about things that I'm overwhelmingly passionate about, but yeah, TLDR up and to the right for Hyperliquid and subsequent DeFi.
As a DeFi investor, I turn to Maple for permissionless institutional quality yield in a single liquid asset backed by over-collateralized loans. Maple's SYRUPUSDC and SYRUPUSDT are now supported as collateral for enhanced yields on major DeFi liquidity hubs such as Pendle, Fluid, Camino, Jupiter, Morpho, and soon Aave. To learn more about Maple, go to maple.finance. River is building a chain abstraction stablecoin system that connects assets, liquidity, and yield across multiple chains. Season 3 is live. Earn River points by using SAT-USD in DeFi such as Pendle, PancakeSwap, and Uniswap. Stake River points to accumulate more or convert points to River tokens whenever you like. To learn more, go to river.inc. Hey folks, I want to tell you about our sponsor GEARBOX, the protocol that reimagines on-chain lending. With GEARBOX, you can access 10x credit across DeFi or lend for passive yields with single asset deposits and no impermanent loss. Users can access leverage to margin trade, stake, farm, and more. To learn more about GEARBOX, go to gearbox.fi. Puffer Institutional delivers secure, high-yield Ethereum staking built for institutions. With battle-tested security, granular access controls, and the ability to boost APY by securing multiple AVSs, Puffer gives institutions full control and optimized returns. Puffer is also behind the Unify-based rollup, aiming to transform Ethereum's future in a world where all L2s are working together. To learn more, go to institutional.puffer.fi. If you're not already listening to the Edge podcast regularly, there's a bunch of themes here. For example, we just had on one of the former contributors to Abraxas, who's now building a protocol that allows you to do some really big leverage trades on tokenized yield. Point being is Abraxas is a great example of Hyperliquid's ecosystem maturing. They're folks that have been running that delta neutral trade, I think, since like 2018, and they've been running that profitably quarter over quarter for the last, 7-8 years. So there's very mature market participants that are in the Hyperliquid ecosystem. And I think this interview that is going to follow ours today here with Omnia, I think what stood out for me is there is just so much opportunity in terms of the markets that are being created, the access 24/7, the permissionless nature of DeFi markets, and all of that to say that creates more interest than in Hyperliquid. Then, of course, there's more demand to be buying HYPE. And like that's where then something like iHype or KHype comes into play. Anyways, I think, Nomadic, you had one more question here around HYPE unlocks coming up on the anniversary of the TGE.
Yeah, and just before I get into that one, just kind of talking about this maturation. And there's certain people I just see talking about Hyperliquid that I just feel is like, that's awesome. Every time they tweet about it, it's like high signal. Like, I don't know if anybody follows Citrini research, but you can see that account is really getting interested in Hyperliquid. It has been for a little while now, but I think people like that are really going to glob onto the HIP-3 stuff in a big way. And I think they're going to become some of the biggest marketers for the platform as well. So I think that's an interesting trend to watch, is just kind of like these big, almost like FinTwit accounts that are like, holy shit, you can do this. Okay, I'm going to do it. And then I'm going to go write about it in my blog that has like 50,000 subs. And then, you know what I mean? Like you said before, everybody's kind of a marketer for it. I mean, that's kind of what strong communities do. But okay, so something that I've seen people debate a bit on the timeline is just how this looming unlock thing with the team. I don't admit to know much about it. My instant knee-jerk reaction is like, yeah, Jeff isn't going to YOLO his whole bag into the chart and just ride off into the sunset. That's the dumbest thing I've ever heard. If you paid attention just to the way this guy operates, like, you can kind of suss out people's morals and values, I think, to some extent. Sure, everybody can be actors as well, but I don't think there's any of that going on here. If you paid attention to a lot of his long-form interviews. But anyways, I don't know what's going to happen. Maybe can you fill people in on this unlock situation and maybe what you think may or may not happen?
Yeah, I should probably preface this by saying like more people should think this so that they can send Hyperliquid as low as possible, so I can just buy all of their hype. I think many people feel this way, so I definitely like support the fund. Like, please continue funding so you could like lower the hype price, and everyone who actually knows what's going on can get ahead of it. You know? So I think that's been really hilarious to see like people think that like unlocks are going to do anything. I mean, like it takes like extremely basic DD to understand on a more serious note that the Hyperliquid team literally, I mean, I can't say that they don't need Hyperliquid. Maybe they need it spiritually and why they've done what they've done, but from a financial perspective, it is very obvious that the Hyperliquid team does not need Hyperliquid. They can walk away from Hyperliquid tomorrow and be totally fine. Essentially, nobody just passes through. This has like never happened in finance, essentially, where people will happily pass over hundreds of millions of dollars, if not billions of dollars in yield they could be taking some kind of clip on. I mean, like no any Y Combinator business that went to them and said, hey, like we are going to pass on 100% of the revenue over to our stakeholders or to people who use our product, and we're not going to keep any of it ourselves. The people at Y Combinator would probably look at that and be like, what is this, a charity? Like, no. And then vote them out or something like that and replace them with like a CEO that will fleece people. So it is very clear, like just looking at it, like if people were to look at Hyperliquid as a venture investment, right? Which again, I understand for classic retail or even like, I don't know, liquid funds who don't even look at it from this manner. Like if you look at it from that way, right? And you talk about this is the first year of hype trading. If you had to hang on to any asset for 4 years that wasn't Bitcoin, what would you hold, right? You will have a very, very hard time in the top 10, in the top 25, and in the top 100 finding anything outside of Hyperliquid that's worth holding. Regardless of the Solana meme coin, seasonal nature, ETH, EIP 1559 burn, which has been completely unwound by the lack of economic activity happening on ETH. And by economic activity, I mean trading volumes that incur extremely high gas fees that have a very clear and very quick ceiling and stop the ETH burn once that slows down. Again, all meme coin degeneracy related. Hyperliquid is the only one that has benefited tremendously, especially at the chain level, right? On a very, very differentiated level of financial offering, right? Or from a DeFi primitive perspective, right? And what I mean by this is Hypercore doesn't even charge gas, and it's the most performant chain in existence today, right? Like these guys are not playing for table stakes. Like $1 billion for Jeff or whoever on the team is literally fucking table stakes, really. Like I don't even think it's financial. It's like if they've accomplished their mission over years ahead, right? Then maybe, okay, they may hit a Jeff Bezos and take some kind of payday in the future. And even if they were to turn around next week and start selling hype, they would deserve every single dollar of it, and we would all be thankful for the redistribution. Like everybody who believes in what's happening on Hyperliquid would be extremely thankful for redistributing that hype to people who would happily own it from them. So, the reason for this FUD is because the entire space has been completely desensitized and actually, I would even argue, overstimulated by quote unquote pending and looming unlocks because of the shit behavior that's occurred across almost every reputable protocol and beyond over the last 4 to 8 years in the crypto space, right? Unlocks have always been something to fear because the team is in it for the financial gain to dump on your ass, right? Like, of course. But now, especially with what's occurred on Hyperliquid and teams that follow and emulate the Hyperliquid model, it's been super, super different to see, right? Super different. And again, it's almost this realm where I can see the skepticism from people and saying, oh, it's too good to be true. Jeff is not so benevolent that he's willing to lock his tokens forever. And I don't even agree with that personally. Like, I don't think Jeff is never going to be in it for some kind of financial gain. It's just that it has to, like, when you think of the ideals of a team like Hyperliquid, especially it's like 11 or 12 of them now, I believe, with like one new hire like every half of a year at this point. You clearly see that what's being worked towards here is not something to like pay bills short term or whatever the financial game of typical teams might be. So yeah, like I was having this conversation earlier. It's similar to how people think that the assistance fund should be used for anything other than hype. I personally think they should be used for hype and hype only, right? And at some point, the 1% share that currently goes to HLP should dwindle to zero as Hyperliquid eventually reduces support for HLP, my personal thoughts. And 100% of the revenue going to hype makes it even more pure of an asset than it already is today. Is the only other thing that would be exciting for Wall Street to hold because of the cash flows than Bitcoin, because of its its halving situation every 4 years. So anyway, I promise you, I could literally record a podcast just talking to myself about this for at least an hour or two straight. So I'll leave it at that. But there are several reasons why, regardless of what happens, whether they relock their tokens until 2045 or they, start selling immediately. Like, anybody who actually cares and believes in what's happening on Hyperliquid actually does not give a shit. That's the crazy part. The Hyperliquid team has purchased and earned the right to do whatever the they want, right? They've raised zero capital, right? They do things on their own terms, and they've not bent the knee to anybody is hitting them with the norm in terms of what is expected of a founder or teams in the crypto space. So it's been really interesting to see, and regardless of what happens, I'm rooting for them. We will continue building with our entire life force on Hyperliquid, literally again, regardless of what happens. And again, this is coming from the team on Hyperliquid who essentially has built the most economic value and has captured the most economic value, right? So that alone should be a signal for people who are weary of building on Hyperliquid. I see teams building like on several chains at once, right? Like, that's okay, have a multi-chain strategy or whatever, but yeah, like, I've also seen teams drop everything to come and build on Hyperliquid, and that has been incredibly inspiring to see as well, right? Like, there are still some people who are on Hyperliquid to probably just be close to or somewhat parallel to traders with large economic value and try to capture some flows from that, rather than like aligning with the ideals of the ecosystem and building their business based on that as well. So, like I said, I continue to ramble, and I can continue doing this, but for the sake of listeners, I won't continue plaguing your ears with that. But yeah, I mean, this is I've been on Hyperliquid over 2.5 years now, personally, and several people on our team the same thing, right? Like, this is why our team has had zero turnover. Like, all of us have been on Hyperliquid since practically the very beginning, right? It's very rare to see, and we feel like, given the proximity of which we've been able to essentially build relationships on Hyperliquid with every type of trader you can think of, every type of staker you can think of, from retail to institutional. This is what's led to the creation and subsequent, so far, just beginning success of Kinetiq, and like what's to follow, hopefully soon after. And for us, similar to Hyperliquid, like, we believe our success is very synonymous with Hyperliquid, as is any protocol. And again, it keeps getting back into my head where, like, it would be a very sad reality if the largest liquid staking protocol did not also support some of Hyperliquid's most insane and groundbreaking innovations and do what it can to ensure that this goes out to the world.
Today is November 21st, 2025. We are getting close to the 1-year anniversary of the HYPE token launching. I believe it was November 29th, 2024. Curious, again, any theories of anything the team might do? I've seen a lot of speculation about this. You could speculate for hours and days about this as well, but yeah. I don't know. Is there going to be a new points campaign? Is there going to be a Airdrop? So, is there going to be a burn? Like, what do you think is going to happen?
Some people here may remember or be very familiar with like the BNB run from 2020 to 2021, and this was very largely triggered by obviously the crime of Binance and their control of the BNB token, and then announcing burns for it was like the greatest thing since sliced bread. I have a few theories on this, as you can imagine. The amazing part about what I'm about to say is that regardless of what happens, I think everyone on Hyperliquid wins, whether you're a holder, you're a builder, or you're simply enjoying from the sideline. It doesn't matter. I think it's a massive win for the entire space, regardless of what happens. I like to use two examples here. The first one is obviously BNB, right? There's a massive war chest of BNB that just sits in God knows where, and they get to burn it wherever the fuck they want, and they've made it quarterly. Congratulations, right? The other side of it too, which a lot of people here may remember, is similar to like Avalanche Rush in 2021, which kicked off the infamous or famous, depending on how you look at it, ecosystem, quote unquote, ecosystem rotation season, right? Or game or whatever people called it. That's fine, I remember. And this was like the flooding of like hundreds. It was like at that time, like nearly hundreds of millions of dollars of incentives in the form of AVAX tokens. And that kicked off every single ecosystem subsequently to do it after. Harmony, everything, like literally everything that had an EVM compatible DeFi ecosystem kicked off some massive incentive program. So Hyperliquid is in a really interesting place, right? You gotta love when Hyperliquid has the cards, and they always have the cards by design, right? They can sit there and burn the tokens, and this would communicate objective value to every single hype holder, right? Because they would have a greater percentage of the network with every token that ceases to exist, right? That's one theory for it. I feel like it's the most clean. Again, like this is my personal thought, right? Why do I feel it's the most clean? Because you're communicating value objectively to those who essentially have, jumped off the cliff and bought into hype. You then force everyone who's on the sideline to basically buy into hype, and then, essentially, if they want to reap the benefit of the supply shrinking, then they're forced to own hype and do so on the open market. Now that's tapping off the burn theory. The other side of that theory as well, which is the incentives theory, is that they can continue to gradually and sustainably grow their user base by introducing the hype points or the emissions that they can come up with or whatever to essentially target specific activities. I feel like, again, this is still a great option. And like I said, Hyperliquid still has all the cards, but it feels to me personally a little bit less clean because there's always an action that could be tweaked, right? Like you may want people to trade spot more. You may want people to trade perps more. You may want people to do certain actions on such and such, right? Like doesn't matter. Like it's slightly less clean in my opinion. And the reason this only matters is because the Hyperliquid team's groove and like usual approach is doing things in an objective way. So that's why I don't particularly wish they do anything, right? I just feel like if like pattern matching has always helped me kind of try and figure out what the Hyperliquid ecosystem and team's next moves are, right? So yeah, this has been really mentally helpful for me just from a framework perspective to think about that. So like that's my two paths as to like what happens for emissions on Hyperliquid and what happens to the remaining 42% of hype tokens that sits as potential emissions. And doing the math at like 35 or whatever the price of hype is today, yeah, we're talking like high $1 billion incentives, right? Like it's a multi 10-figure amount, which would be bigger than any incentive program practically ever. Essentially, Hyperliquid still today, even if it dropped another 50, 80, 90%, would still be the largest airdrop that's ever occurred. So yeah, at that point, that's all that needs to be said. But the ecosystem incentive program that may follow, who knows, would be equally huge in record-setting terms by a massive magnitude. And yeah, I mean, who knows? They could keep emissions for 20 years. So like, who knows? Another really interesting thing I personally like is the fact that staking rewards are very low. It forces people to go out and actually use DeFi. That's been a problem I've noticed with Solana. Has really, really high inflation. I think 8% last I checked. So why would anybody that's holding Sol care to really use much throughout DeFi? You can just sit there, state, take no smart contract risk, and just eat 8% a year and like not get diluted at all. So these are my, again, equally passionate thoughts. I think regardless of what happens, like everyone on Hyperliquid wins, whether you're a builder, a holder, a user of products, whatever. I literally should not care less what happens. Personally, like until people started talking about this, I forgot that there was emissions. Truly, like today, they might as well leave the existing 33% circulating and call it a day, and then get their well-deserved team allocation and ride off into the sunset in 20 years when Hyperliquid is doing like trillions of dollars in volume a day. So yeah, that's my, again, extremist view. But yeah, so I hope that helps and gives people some ideas, and I'm obviously happy to chat about it.
Yeah, all really interesting theories there. I could definitely argue for the token burn or using points to incentivize whatever activity is necessary for like the health of the protocol. But anyways, guys, I think this is a great place for us to wrap up. So first, I want to remind our listeners they can learn more about Kinetiq by going to kinetiq.xyz. Follow Kinetiq_XYZ on Twitter or X. Follow Omnia's handle. It's 0xOmnia. And then if you go to the Hyperliquid trading UI, app.hyperliquid.xyz/trade, if you're looking for the HIP-3 markets, just click on the little drop down for the markets, and you'll see there's a little section that says HIP-3. And it does filter, I believe, by the most liquid markets or the most active markets versus all of those that have been stood up and are available. So anyways, great time to get yourself familiar with that as well. With all that said, Omnia, thank you so much for your time. I want to give you the final word before we go.
I appreciate this a lot, man. Honestly, it's like the third one we do, I think. So, yeah, couldn't be more excited to obviously be putting this one out and doing more in the future. You had made a comment before, and I'm like, I always think to myself, like, what would Hyperliquid be priced at if it were a stock? And that's what makes me feel like the hyper strategies guys and people who are creating hype stats today have realized and are sprinting towards that reality. So very, very interesting, to say the least. Anyway, I really appreciate this. Thanks everyone, not only for like listening, but also using the protocol. Any questions, obviously myself and the team are open to ensuring you guys are taken care of. But otherwise, yes, thanks a lot, really. And see you on the other side.
Thanks everyone for tuning in. To stay up to date with future episodes, plus get expert tips, strategies, and exclusive content, subscribe to our free newsletter at the-edge.xyz.